All right. Good afternoon, everyone. My name is Sean Balog, and I'd like to welcome you to today's webinar presented by Encompass Solutions and Avalara. The webinar will focus on the recent Supreme Court decision affecting remote seller tax law and the new powers granted to states, how to determine their effect on your business, and what you can do next to ensure that you're acting in accordance with those changes moving forward. Attendees are in listen-only mode, meaning you're muted by default, though I invite you to submit any questions or comments you may have in chat or the Q&A section. A complete list of questions and answers will be provided to attendees by email after the webinar. Additionally, a link to the recording will be provided by email once it is available. For those of you who are unfamiliar with Avalara, more than 20,000 companies from independent operators to mid-sized businesses and Fortune 100 enterprises choose Avalara for tax compliance tools scaled to their needs. Avalara allows businesses to navigate rapidly changing rates and rules with more than 600 pre-built integrations, which come ready to connect to today's most widely used ERP, accounting, e-commerce, and other business software applications. George Padilla will be presenting on behalf of Avalara, and I'll invite him to tell you a bit about himself before getting into the presentation. George, are you ready?
I am. Thank you, Sean.
You're welcome.
Okay. Well, thank you all for joining. I appreciate it. My name is George Padilla, and I'll be talking a little bit about sales tax. I'll just do a quick intro about myself first. Then we'll talk about the South Dakota versus Wayfair ruling, economic nexus and exactly what that is, what should you do, automating sales tax compliance, and any questions and answers you may have at the end. So a little bit about myself. I've spent 11 years as an alliance manager in the software space. I've covered all different types of software, whether it's distribution solutions, HRIS, ERP, e-commerce solutions. And I've been with Avalara for just under 2 years now. So fortunately, I love what I do. And I see a huge benefit to any person needing sales tax help by automating that process. Just jumping right in, exactly what South Dakota versus Wayfair was about. South Dakota versus Wayfair was a Supreme Court case that talked about what taxability issues were within the state of South Dakota. And it most specifically circled around physical presence. Now, to talk about South Dakota versus Wayfair, you have to go first to Quilt versus North Dakota back in 1991. Quilt versus North Dakota was a Supreme Court case that had the same type of questions about sales tax and what the taxability rules were within that state. In Quilt versus North Dakota, what the problem was is that they argued that since there wasn't a physical presence, that they did not have to charge sales tax. Supreme Court sided with Quilt Corp, and thus there was no sales tax required to be collected unless you have physical presence. However, what that did was it also left, the Supreme Court left the decision to what exactly entails a physical presence up to the states. So fast forward to May of this year, what you're looking at was the South Dakota versus Wayfair decision. Since the advent of the internet, you had a lot more people worried about the internet and online presence. So because brick and mortar shops were being unfairly disadvantaged to these online retailers, they tried to just look over the decision again and see what they can come up with. Well, this time the Supreme Court ruled in favor with South Dakota and said that, you know what, because of the internet and because of these borders that are no longer there, physical presence does entail internet presence as well. So as of June 21st, 2008, South Dakota was allowed to make any vendors collect sales tax. So who's affected? Remote sellers who are not registered as states now have economic nexus. And I'll get into that in a little bit. What they said is that annual sales in excess of $100,000 or 200 transactions into South Dakota now trigger what it is economic nexus. Now, you no longer need a physical presence. And what it also does is it also affects services. So the effective date is actually as of January 1st, 2019. And South Dakota is not published or explicitly slated when their law will go into effect. That's not the case anymore. It's January 1st of 2019. But the most impactful is that the physical presence rule has been overturned. So in terms of just South Dakota alone, if you're already registered in South Dakota, does this Supreme Court decision apply to you? It will not affect any people already registered in the state of South Dakota. So does the ruling only apply to online transactions? It applies to online and offline sales. Again, what I mentioned was services are also included. And does the economic nexus rule apply to non-taxable transactions? So for example, food. Food is something that's never been taxed in the state of South Dakota, and it will continue not to be taxed. So what it does do is it add economic nexus activities to an existing list of nexus creating activities. So it doesn't change what is tax exempt. It'll apply to service providers, not just tangible personal property, as South Dakota taxes many services. And it'll also apply to manufacturers and wholesalers who sell direct to consumers. So now let's get into economic nexus and why the states have been forcibly trying to make this change. The reason why that South Dakota has been trying to make this change along with other states is that 47% of total state revenue is composed of sales tax. And the reason is that it's the easiest sales tax to impose without too much quote unquote blood on your hands. No one's ever gotten elected by saying, we're gonna increase your property taxes, or we're gonna increase your income taxes. The best way that states have figured out to collect sales tax to collect taxes or revenue is based on sales tax. So economic nexus, what exactly is it? And I've already brought up a little bit about it to where it's $100,000 in sales or 100 transactions. Well, economic nexus is a tax collecting obligation that imposed on sellers based on their level of economic activity within a state. So unlike physical presence, it's based entirely on sales revenue, transactions, and or both. Now, I'm sure a few questions may be asked. Does that mean that every state is 100 or 200 transactions or $100,000? The answer is no. Every state is going to be different. So let me just show you an example of the acceleration in economic nexus states that has grown over the last 6 months. So as of July 2018, you have 19 states that were enacting economic nexus. However, as of October 4th, 2018, that number jumped to 29 states. So in 3 months, 10 states have added economic nexus to their laws. It's not a question of if economic nexus is going to hit your state, it's a question of when. So some examples of the differences between different states, because I did mention everyone's different. In Vermont, for example, it got enacted to where as of July 1st, 2018, remote sellers who do a certain amount of business must register with the state and collect sales tax and use tax starting July 1st, 2018. However, in Hawaii, it's a little bit different to where not only is it, and it took effect on the same day of 2018, but they've also backdated everything to December 31st, 2017. So even though you might not have been collecting sales tax from January, you still would be responsible for the first 6 months of the year in terms of sales tax. So what should you do? First thing you should do is obviously not panic. What we suggest is calling your SALT CPA, which is just your sales tax CPA. SALT stands for state and local tax CPA, or an attorney tax advisor, and find out exactly if you do have liability within the states that you do business in. If you don't have a SALT CPA, Avalara does have a tax advisory service that can help you with that. And it's relatively inexpensive. I think it's like $1,500 or $2,000 or somewhere wrong there. It's not a lot at all, but it'll tell you your liability throughout your business model. We can help you determine where you have nexus, We can get ongoing monitoring service to see when new nexus is established. We can help you register in new jurisdictions as you grow. And we could also help you navigate tasks relating to establishing new nexus. So here's a few resources, and I'll send this out to Encompass so they can send it out to you guys as to the references that we do offer for you, so you can have up-to-date information on the Wayfair law and how it is impacting and ever-changing. So one solution that we can offer you is our suite of solutions at Avalara. So let me show you why it's important. So we did a survey to CPAs within a company, controllers, CFOs, and asked if they were actually audited, would an auditor find a mistake? Not surprisingly, 75% of those surveyed actually said that they think that they would find a mistake in any of their returns filings. And the yearly employee cost of compliance is anywhere between $67,000 to $400,000. The reason why that's so large is because companies that do enterprise type level business obviously have more complex tax laws, to where if you have an SMB type of business, it would be on the lower end of that spectrum. So top performing organizations are 72% more likely to leverage real-time updates to tax regulatory changes. Why is that? Well, because there were 40,000 tax changes last year alone. And then they're also 3.3 times as likely to have automated workflows for tax preparations, filings, remittance, and recovery. And the reason is because whoever's doing your returns, the best that can happen is that they do their job well. The worst that can happen is that they can get audited and cost hundreds of thousands of dollars. It is time consuming, and I'm going to get into a little bit of that as to how time consuming it is. So when it comes to tax compliance, rates are just part of the equation. You also have Nexus, and again, Nexus is just where you have a sales tax liability within a certain state or demographic. Product taxability. Is your product taxable? Again, there were 40,000 changes to where one year it may not be taxable, the next year it may be. A good example is services. Services are now starting to be taxed at a heavier rate. Jurisdiction assignments. With redistricting and gerrymandering, depending on which side of the political fence you fall on, those can also change as well. Exemption certificates. Let's say you don't collect sales tax and you have a nonprofit that you work with that you sell to. Well, just because you don't collect sales tax doesn't mean you don't have to have that exemption certificate. And actually, that's one of the first things auditors look at when actually getting, when auditing, because this is the biggest mistake that people make. They don't keep their exemption certificates up to date. A good example of that is, imagine the last day of the month and the last day of the quarter, and you have a sales rep trying to make a certain goal. Well, they get a PO in for $100,000. And the person who's issuing the PO says, you know what, we're going to make this purchase today, but we don't have our exemption certificate right now. Can we get it to you tomorrow? Your sales rep is not going to say no to that deal. They'll say, sure, get it to me tomorrow and it'll be fine. But what happens the next day? Either the company that you sold it to forgets to give it to you, or you have a sales rep that's already on to the next deal. It's easy to overlook, and it's a very costly mistake if you don't follow through with it. Audit readiness. If you're being audited tomorrow, how easy would it be for you to collect all of your documents in one repository to where it's just a click of a button? And then state and local tax prep and filing. We can help automate that as well. So any efforts spent on sales tax and use tax compliance and related activities are just, they're non-revenue generating activity. Something that could be a little more effective use of a company's time is to streamline your accounts payable department, streamline your accounts receivable department, or maybe looking at the feasibility of bringing a new product to market within a certain geographical location or demographic. That's a better use of a finance person's background time. So let me show you a few examples of why sales tax is so complicated and confusing. So for example, in the state of New York, if you have a bagel, it's considered a food, so it's considered exempt. However, if you slice that bagel in half, all of a sudden that bagel is taxable. Why? Because it's considered prepared food, and prepared food is taxable in the state of New York. Candy bar in the state of Indiana. If you buy a Hershey bar, it's considered food, so a candy, so it's obviously taxable. However, if you buy a cookies and cream Hershey bar in the state of Indiana, it's tax exempt. And the reason why is that wheat flour is included in that cookies and cream Hershey bar, and wheat is a subsidized item in the state of Indiana. Take donuts, for example, in the state of Texas. If you buy 5 donuts or less in the state of Texas, it is taxable. However, 6 or more, it's exempt. Why is that the case? It makes no sense at all. But it's not just limited to foods also. Things like tree trimming in the state of California. If you use lights in your tree trimming, it's taxable. But if you only use the labor portion of it, it is tax exempt. And then finally, snow removal in the Midwest. It's taxable in the state of Ohio. However, it's exempt in the state of Illinois. So going further into software, software is now taxed 450 different ways across 45 categories in the United States. Now imagine being a controller or a financial analyst trying to figure out what the taxability rate are for your products. Is that necessarily the best use of your time? So let's just assume that you think that your person has enough time to actually figure out what those tax rates are in those particular areas that you're using in. So let's take an example. So you think, you know what, let me use zip codes. Zip codes are the best way of calculating sales tax. Well, I'll tell you why that's wrong. So take Denver, for example. Now let's go into Greenwood Village. You think with Greenwood Village, it has 80111, and you think, okay, well, I'll just use the tax rates based on that zip code. Well, if you did that, you'd be incorrect because there are 6 other different districts that include the 80111 zip code. And the reason why this is the case is because of gerrymandering or redistricting, again, which depending on which way you fall on the fence. So sales tax is based on certain districts. So if you had just used that zip code, you would have missed out on 5 other sales tax districts that you would have been liable for. And the state auditor is not going to say, well, you made your best effort, we're going to let you go with that. They're going to ding you, and they're going to also charge you interest for the taxes you did miss. So let's just say that going beyond the sales tax rates, that you're like, you know what, I can calculate the sales tax returns myself. Well, we have someone that works at Avalara that's been in the business for 30 years. They tried doing a California state sales tax return, and it took them over 2 hours to do. So I'm going to show you an example of that. So here's an example of this California sales tax return. Now what you'll notice is that you have to break down the return down to city level. So every city has different rates. And is that necessarily the best use of your time? How much time would it take you to calculate the rates for every single city? It's definitely not the best use of your time to do so. It's a non-revenue generating activity. So Avalara's sales tax suite is the only end-to-end solution that covers not only the AvaTax, which is the tax calculations, but it also covers the exemption certificate management system, as well as your returns for filing to states. And we're the only company that is the end-to-end solution that keeps everything in-house. So in these times to where security and data is very sensitive issue, you want to be able to keep everything in one house. And then also we're the only company that does keep, we're the only company that does guarantee our returns. So we have over 20,000 customers that use Avalara to get sales tax compliant. Again, we're accurate, we're efficient, and we're integrated. We're the only company out there that does automated sales tax that has over 600 integrations. regardless of whether it's an ERP system, a POS system, an e-commerce system, billing and CRM systems. So no matter what your system is, we can help you do that. And it's not a cookie cutter type of solution. We have a custom solution designed for every single client. And here are some of the logos that we have that do use Avalara, and we're growing every single month. So that being said, that's all I have. I'll open it up for any questions and answers you may have. And thank you very much for allowing me to speak to you.
Thank you very much, George. It was very informative. And we'll wait a minute and see if anyone has any questions. Well, it doesn't look like we do. So I'll go ahead and say our goodbyes. I would like to thank everyone for attending today. Hopefully this webinar was informative and has given you some things to consider moving forward. For those of you interested in learning more about Encompass Solutions, ERP software, business consulting, and managed services expertise, or if you would like us to connect you with the right representatives at Avalara to address your business's tax compliance needs, please contact me, Sean Balog. I'll go ahead and leave that up for a minute. And I'd like you all to take care and have a great week. Thanks again.
Thanks.
Oh, wait, it looks like we do have one question.
Sure.
How often are there updates to the software?
We update in real time. So it's literally up as soon as the system, as soon as there is a change, we communicate with every single state and we update it in real time. It's a cloud-based solution, so you will never have any lag in updates in your system.
Excellent. Thank you.
Perfect.
Any more questions? Doesn't look like it. So thanks again, everyone. Take care. Goodbye.
Thank you.